Welcome to Daily Tax Savings. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Let's jump right in. Today's topic is the worst type of small business tax situation. Could be an outright disaster. And this is simply a story of a case I worked on this week. It's not my case. I was helping out another tax professional, but why I think that this situation is going to be more common and will often be a disaster, unfortunately, for small businesses. So wind back to the pandemic. The federal government offered small business something called employee retention credit. There were firms sprung out of the woodwork that were marketing, get your tens of thousands of dollars of employee retention credit. It's easy to do. Government's giving away free cash. We'll take care of everything. And a lot of companies went for that. They had these firms fill out forms and submit for tax credits, and many of these businesses received a big check in the mail. Now, the case that I heard about was about $50,000. A small business received a check for employee retention credit. Then the government realized that a lot of these were either outright fraudulent or greatly exaggerated but not substantiated, and froze all of them. Now, there are law firms there's a few law firms out there that saying it was not legal for the government to freeze these. They need to process these. I get it, but of the cases that I've seen, the majority of claims that are not processed yet were not valid to begin with. And even some of those that are processed and paid, a significant portion of them do have problems, and they ultimately, if audited, will not stand up, and the government will want their money back. That's what happened in this case. The business received a letter to get their money back. Now, here's the next problem. Almost no tax professionals have expertise in fighting employee retention credit disputes, and that's what this is. You would need a tax representative to go to the IRS and argue that in fact you were entitled and they shouldn't have yanked your money back. However, no one can say that I have years of experience and hundreds of cases of wins. It's brand new, so there's very few people that do. There are some very competent people that are knowledgeable, but I don't think it would be fair for anyone to say that they have a good track record of recovering money in these types of claims after the IRS has denied a claim. So what does that mean? It means that if it's my client, I have to say, look, the IRS is demanding $50,000 back from you. And now you're talking about hiring me to go and fight for it. And there's no assurance. I have no track record, no probability, no guarantee that we're not spending good money after bad. So normally we consider that we could actually calculate and estimate the probability of success and therefore the rate of return. And we're going to see a positive rate on return. So if it's going to cost a few $1,000s to even get into this dispute with the IRS to take it to the next level, we want to have a reasonable assurance that we're going to be successful. We do not have that in a case like this. And in this case I worked on, even less so, because the accountant, I think mentioned, had only handled representation for like half a dozen times in her, it sounds like a young accountant, and possibly in her career. So if you have an inexperienced representative in a area where no one has expertise, the risks are greatly heightened. And in addition, the backdrop is, IRS is a mess. They've lost a third of their auditors. I understand in this case, the demand letter came without other communication, without any explanation as to why the government was denying that. And I suspect that when the representative or the business goes to ask for an explanation, they're not going to get one. And it's going to slow the system down and gum up the dispute process even further. All right, so then let's take it one step further. So the IRS has demanded $50,000 back that they sent this business a few years ago. Small business doesn't have $50,000. They don't have the ability to borrow $50,000. The average small business is doing worse today than they were 2 years ago. We had a little bit of post-pandemic surge, but in my experience, in my observation, that has died away. Small businesses are struggling, and in fact, the accountant in this case confirmed that's the case. This business is struggling for their very survival, which then brings up to my last point. If you're a small business, you're struggling for survival, and you get an additional sudden unexpected bill for $50,000 from the IRS, who should be taken very seriously in a situation like this. I think we need to change our entire focus and look at overall holistic financial sustainability. What does this owner need to do right now to protect himself, herself? I don't know, the family, the owners, the key people. What is the best solution with a business that's in trouble and big financial demands that they cannot pay? Remember, I think I've said before, usually when there's IRS debt that a small business can't pay, there's usually other debt that they can't pay as well. So we need to look at the whole big picture, and I think step back away from our tax accountant's role and look at the holistic business coaching type of situation. What should this business owner really be doing? What do they want to focus on for their overall life and big picture values? What's going to let them sleep at night at this point better than the current situation? So I wish I was wrong, but I'm afraid we're going to see many more of these employee retention credit, ERC, credit reclaims causing pain and angst in the small business community. We'd love to hear your thoughts, feedback, or comments on the issue. Or if you want to talk with me one-on-one, that's easy also. Find me at taxproblems.cpa. I'll be back tomorrow with another Tax Savings Minute.